Panic buying at supermarkets at the start of the pandemic hasn't been enough to stop a profit slump at Woolies. The supermarket giant was down more than 20% thanks to COVID-19. They've also spent millions trying to protect staff and customers from the virus, something the CEO says he is not ashamed of.
Social distancing, masks and hand sanitiser, not what you'd imagine shopping would look like in 2020.
In February was all about the bushfires, the droughts, White Island, and what we had to endure through that. Little did we know what lay ahead for the next 4 months.
Net profit from continuing operations has fallen almost 22% to $1.16 billion. That's despite a more than 8% jump in sales to almost $64 billion, driven by panic buying in the early stages of the pandemic.
Our performance really started very strongly and it finished very strongly, but what happened in between was almost extraordinary.
Hitting the supermarket's bottom line, additional in-store cleaning and security costs worth $275 million.
No one could have seen that coming, and Woolworths have taken extraordinary measures to protect their staff and, of course, us as the public.
There's also $176 million of costs linked to redundancies at New South Wales distribution centres, $230 million from the demerger of its drinks division and the repayment of thousands of employees it underpaid. But it's the boom in buying all of this from the comfort of your home that's really transforming the business. Online shopping has surged and now accounts for 5.5% of total sales.
We've sort of seen 3 years of growth in 3 months, but it's all been driven by consumers wanting it.
While Big W is profitable for the first time in 4 years.
The challenge will be the hotels and poker machine business for Woolworths. That's a key part of their operating strategy, and of course it's most directly exposed to COVID as we speak.
And while sales over the past 2 months have been encouraging, it'll still be a difficult year. Gillian Bowen for 10 News First.